Howdy. Welcome back to Dion Talk. Setting your rents. If you just acquired a rental, or if you own a property and are experiencing a tenant turnover, or if you're looking at deals and you want to know if it's a deal worth pursuing or not, setting your rents is one of the most important skills that you need to develop. And during times like we're seeing now, where inflation is higher than usual, what I normally do to find my area average rents doesn't work. One of the main reasons why I really want to make this video is I've made a lot of Facebook posts and comments on the BiggerPockets forums where I talk about how I find those area average rents. Most of the time, what I would do is I would check Rentometer. I pay for an annual membership. I usually wait for it to go on sale. It's like 39 bucks. They're pretty accurate. And I would call the housing authority. The Section 8 program is usually spot on for area average rents. The problem is Rentometer and the housing authority base their rents on historical data. What has happened in the last 12 months? And this year, with inflation being as high as it is, rents are going up faster than historical data will show. But before I get into what's working for me now, I want to cover one of the biggest mistakes I hear new investors talking about when we bring up the subject of setting your rents. Sometimes I'll hear a new investor say something like, if my mortgage is $1,000 a month, then I need to rent the place out for at least $1,500 a month. And that's pretty much exactly backwards to how this needs to be looked at. Our mortgage has absolutely nothing to do with how much the rent should be. If our mortgage told us where to set the rents, then we'd be able to buy any property for any price and just set the rents high enough to get a good enough return, right? But not today. That's not how any of this works.
Not today.
If the mortgage determined how much the rent was, then a paid off property would rent for $500 or $600 a month, right? Try not to take this the wrong way, but tenants do not care what your expenses are at all. They just don't. The rents that we can get tells us how much mortgage we can afford, not the other way around. Tenants actually look at this the same way that we need to. Local comparables. What would something similar in the area rent for? I'm going to steal a sentence from Justin Cambra, who came on and did a deal deep delve with me. But he works at Amazon, and he says one of the reasons Amazon is so successful is when they're working, they start with the customer and they work backwards. We need to do the same thing. Start as though you were a tenant looking for a place to rent and work backwards. So in the current market, with rents going up as fast as they are, what I did is I went to rent.com, Zillow, Craigslist, Trulia, and where I actually list my rentals now, apartments.com. And even using this method, you need to be really careful because rents are going up so fast. When I listed my last unit, I think I undershot a bit because even with an increase to the rent that I was getting before, I still had 12 applicants within 4 hours of putting my listing online. As an investor, most of us are thinking about bedroom count, bathroom count, parking, and square footage. Tenants, renters, people looking for rental units, people that I've interacted with, tenants that I currently have asked about bedroom count, bathroom count, and parking. But I have never encountered somebody trying to rent one of my units that's asked about or even seemed to care about square footage. That seems to be something that matters more in the commercial world than it seems to have in the single family or small multifamily arena. As we're setting our rents, we are going to need to be able to screen some tenants. And when you do that, here are some things I like to consider. I collect first month's rent and a security deposit. I do not collect a last month's rent. Not because it's too much money to come with all at once, but because having a month paid off is an incentive for a tenant to move because they feel like that last month in their lease is already paid for. One of my goals is to limit tenant turnover. So I have this video that covers a lot of my tactics that I use to do that, and one of them is not having that last month paid for in advance. I also like to make my security deposit much larger than the rent, at least a couple $100, so that it's not confused with the last month's rent. This is a good screening device because if a person struggles to come up with first month's rent and security deposit, that tells you that they're very close to not being able to pay the rent. One thing I like to note is that when you're collecting those funds for the first month's rent and the security deposit, that I only take verified funds, like a cashier's check. I don't take a check or PayPal or Venmo. Those are ways that I'll collect rents later. But in the beginning, when you're just starting that relationship with this tenant and you don't know them, I don't like to use a format of payment that after the payment is made, the customer can contact their provider and say, I've changed my mind days later and get the funds back. An internet search to find the area average rents is not the only option. It's the one I start with because I'm usually in a pretty quick time crunch, because sometimes to get an offer accepted, speed is your friend as an investor. Here are 2 ways that you can find area average rents if you're not in as much of a hurry as I usually am. First, you can call a property management company in the area. They're usually pretty good at keeping rents up to area average since they're paid on a percentage of gross rents. And even if you're like me and you self-manage, and you have a long list of reasons why you self-manage, it never hurts to get a good relationship started with some local property management companies in the area that you have your rentals, because you never know what's going to change in the future. And second, you can talk to another investor in the area that has rentals. Sometimes you can find them at local real estate meetup groups, or in Facebook groups, or in the BiggerPockets forums, but each market is very different, and sometimes even neighborhoods and markets are different, so make sure you're talking to somebody local. Something to keep in mind, though, is finding out how long that investor's had those tenants in place. Not a lot of landlords are very good at keeping rents up to area averages. I'm a good example of this myself. I like to do 5% every other year, and in many years, this works. This year, that's not going to work. I actually have a friend who has over 30 units, and there are some tenants he has that he has not raised the rents, no kidding, actually literally, in decades. So this year, with rents going up as fast as they are, and inflation being as high as it is, with things like taxes, insurance, material costs for repairs and maintenance, labor costs going up, I'm going to end up using my binder strategy on my existing tenants this year, because a 5% every other year is not going to keep up with what's happening now. This video right here explains my binder strategy. Basically, it gets the tenants to request a rent increase and longer leases. Normally, I use this when I acquire a property and I wait a few months to get to know the tenants a little bit, and I'll use this strategy to bring their rents up to pretty close to area average rents. But this year, it's going to be something I have to use with existing tenants to show them all of the things that are going on in the market. And I will be making another video to let you know how that goes with my entire portfolio of how many tenants requested a rent increase this year. One of the most important uses of the skill of setting your rents isn't so much raising rents on existing tenants, and it's not even really so much using the binder method. It's when you're looking at deals, being able to accurately estimate what the rents will be once you own the property. Because without the ability to do that, finding your cash-on-cash return is almost impossible. And for me, that's the method I use to narrow down the properties that I look at and to know which ones are the right ones to make an offer on. As a reward and a thank you for making it this far in the video, here's my most important information about how to set the area average rents. This is not something you have to practice on your properties or on the properties you invest in. You can practice this skill on properties just to get the skill better. Pick an area, find an address, do all of the research you can to figure out what you would set the rents at, and then contact a property manager, and then contact an investor, and see how close you were. Do this before you make big 30-year commitments for hundreds of thousands of dollars. Get that skill honed to a fine edge, and it's really going to pay off for you. Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.